Hello and welcome. This is Michele McGarvey. If you're watching this, chances are you're ready to take the exciting step towards owning your own home. Whether it's your very first or your next big move, congratulations. You're about to embark on an incredible journey. But before you start browsing listings or attending open houses, there's one crucial step you won't want to overlook: getting pre-approved. And here's why. When you go through the pre-approval process with us, we make sure to collect all your necessary documents up front. We're dedicated to ensure you are qualified and that we set you up for success from the very beginning. So how long does this pre-approval last? Well, you'll be happy to know that it's good for a solid 120 days. That's 4 months of confidence knowing that your rate is protected. And should rates happen to drop during this time, we'll be right there for you to secure that lower rate. Now, who is your team? You're going to have more than one person help you buy this home. I assure you, buying a home is not a DIY project. It is something that you're going to get a group of professionals to help you with this purchase. Who are those professionals? Well, one is your mortgage broker. Your mortgage broker does not cost you anything out of pocket. We get paid from the lender when your mortgage does fund. You're going to have a real estate agent. And again, your real estate agent doesn't cost you anything. They get paid from the seller. You're going to need a lawyer. Now, the lawyer, you're going to want a budget for at least $1,500 to $2,000 for legal fees. That's including property tax adjustments and title registration and other costs that are associated with buying a home. You'll want to have a home inspection. And a home inspection, I would budget for anywhere from $500 to $600. So when you're putting together your closing costs, you always want to have at least 1% to 1.5% of the purchase price of the home. And we want to see that you have that up and above your down payment. Now that team, we work together. Now that we've got your documents ready, I'm going to talk a little bit about how we take your application. When we're taking your application, we're going to get your personal details. It's important that we know how you have your name that appears on your identification, because when you go to your lawyers, the lawyer's going to want to match up your driver's license or your passport to how your title's registered for your home. I'm going to be setting up your application the same way. So we will be needing a copy of your driver's license to make sure that we're matching. We're going to want to know where you work and how long you've worked there. The lender is always looking for at least a 3-year history or more to understand what area of work you're in and how long you've been doing that. We're going to be wanting to get a list of your assets and your liabilities. Now, what makes an asset? Well, those are all the money that you have in your checking account, your savings accounts, TFSA, RSPs. You could have stocks, mutual funds. You can even have group benefits with your employer where you've got savings or stocks or even RSPs. If you're a first-time home buyer, we really want to know about that because you are eligible to use those RSPs to withdraw under that home buyer's plan. Again, a great program to take advantage of. We'll also want to know about vehicles, estimated values, if you have a motorcycle, an RV, trailers, snowmobiles, quads. Those are all assets. And it's amazing how that adds up. And it really feels good to know what your net worth is. For liabilities, we want to know if you have student loans, automobile loans, any type of consolidation loan, lines of credits, credit cards that you owe money on, so that we can add up all your payments to ensure that when we're qualifying you, your housing expenses of your new home and your total debts stay within the ratios of how you qualify. Now, how do we qualify you? We take your income, and that's your gross income before taxes. we take your housing costs, and what is all put into housing costs are mortgage payment, property taxes, a bit of a utility payment, which we call heat, and if there's condo fees. Now, with your mortgage payment, we qualify you under the stress test. The stress test is not painful. I assure you of that. But what it is we take your mortgage payment based on today's rates and we add 2% to that. And we qualify you as if you're making a mortgage payment on an interest rate that's 2% higher than what the rate is that you're actually paying. Why do we do that? Because the lender wants to know that you have room in your budget no matter where rates go. If they're higher at the time that your mortgage comes up for renewal, it gives you that room inside of your house that you would qualify, and we're putting you in a safe place for any fluctuations in your mortgage payments over the life of your mortgage. Your mortgage is qualified over 25 years. And when we qualify you over 25 years, you're going to be selecting terms of either 1 year up to 1, 2, 3, 4, or 5. You could be having a fixed rate or a variable rate. And when your mortgage comes up for renewal, at that time, we're going to assess what the rates are at that time, what your homeowner goals are, and then we renew again. So qualifying you, we want to make sure that your gross income and your housing costs, depending on your credit rating, don't exceed 39% of your income. If you have a solid, good credit rating, which is 680 to 700 plus, we can go up to 39% of your income. If your credit score is less than 680 and down in the 650 range, we may only be able to go up to 32 or 34% of your income. Your credit rating matters. We then allot up to 44% of your income for those additional payments. So if you have a large car payment, that may actually take some of your borrowing power away. So it's really important that that pre-approval is put in place so we understand where exactly your borrowing power is, or if we need to make any adjustments to make housing more affordable. We will be assessing all of that at the pre-approval stage. Your mortgage broker and real estate agent work very closely together when you're looking to buy a home. If you find a home and you want to make sure that before you put an offer on, how the conditions of financing are going to work, I'm here for you. You can call me. I'll make myself available, whether it's evenings, daytime, or weekends, to ensure that that offer is successful. Your real estate agent and myself can talk about timing, how long it'll take to put your financing in place, things that we want to consider about the home, and that helps you write that offer so that the seller has confidence that you're already going to have financing that's going to work out. Having a condition of financing is very important because not only have you been pre-qualified, but the lender also has to qualify the home that you're buying because that's the security for your financing. Once you remove conditions, we then send your mortgage instructions to your lawyer, and we're working alongside of that lawyer as well to make sure that everything closes with success. And again, it's nice to have relationships with all your partners in your team for making your home purchase a success. We all talk, we all want to make sure that we get you those keys. So as you're gearing up for this exciting journey, remember, starting with a pre-approval sets you on the path to home ownership with confidence and clarity. Your dream home is waiting, and we're here to help you every step of the way. Thanks for tuning in. Until next time, I look forward to seeing you again.